Oil prices rose slightly on Wednesday. Contracts for U.S. crude pared earlier losses to settle at $74.50 a barrel. And that was after Libya stressed that it will push OPEC to cut output at next week's meeting. And for more on that meeting and on oil's recent decline, we're joined from Toronto by Diane Francis, award-winning columnist, journalist, and author of Merger of the Century: Why Canada and America Should Become One Country. Diane, good to have you on the show. Thanks for joining us.
Great to be here.
Diane, there's been a 30% drop in Brent prices since June. As we've mentioned, OPEC member countries are meeting next week in Vienna to considering adjusting their output target. A few producers are pushing for sharp output cuts, but OPEC heavyweight Saudi Arabia has not indicated that it will support that move. Diana, why is Saudi Arabia resisting this?
Well, Saudi Arabia has actually been the leader of the cartel called OPEC for decades, and they were the ones that first formed it, organized it. And when you're running a cartel, you don't want prices to stay too high too long, because you end up with a lot of competitors, and then you have a problem. So I think they're trimming on the short term to gain on the long term.
Well, Diane, it sounds like you're in concurrence with a theory that says Saudi Arabia is managing the cartel to keep prices lower in order to disincentivize shale gas and oil sands producers and new players from getting into the market. What do you make of that idea? Why would they do that? Why does it make sense to keep prices so low that other players don't want to get in the game? Does it really serve Saudi Arabia's interest in the long run?
It does in the long run. In the short run, it's a little painful for the OPEC members and all oil producers for that matter. But it also is a very big benefit for the majority of people in the world who consume and don't produce oil. So it does have a long-term benefit and a short-term benefit for everyone. But basically, if they allowed the prices to stay as high as they reached, and remember in 2011 they reached $128 a barrel, then you would see probably twice as much shale oil in the U.S. being developed at higher prices, maybe other offshore elsewhere, and you'd see a lot more oil sands from Canada hitting the market. So, you know, they're very astute in what they're doing. They don't want it to stay too high for too long, and they want to drop it for the short term to drive some people out of business.
So even with Saudi Arabia maintaining this notion of keeping other people out of the market by saying, hey, it's not that profitable, and potentially resisting a cut in production, we have other countries like Venezuela and Nigeria, which earn 70% of its income from crude oil, and they're hurting due to these lower oil prices, and they're pushing very hard to have the output cut. So with these factors at play, what are your expectations for next week's meeting?
Well, I think that maybe the Saudis may, decline in their production rates a bit to push the prices up, because I think they've already scared a lot of high-cost producers out of long-run plans, in other words. And it's also, I'll tell you, the country that's hurt the most by this is Russia. Russia has the same dependency on oil revenues as Nigeria. 70% of exports, 60% of the government. So, everybody's sort of not upset, the fact that Putin is being damaged somehow by these lower prices. But I think Saudi will keep a steady hand. I don't think you'll see a price up or down, a wild swing. They're just going to try and keep it moderately lower than it was before.
Well, Diane, you mentioned Russia, and this certainly has been hurting Russia. Many people are even putting out the theory that Saudi Arabia is in cahoots with the U.S. in order to punish Russia against its actions in the Ukraine. And Russia and Venezuela, meanwhile, are discussing joint action against these low prices. As we're saying, foreign ministers from Venezuela is in Moscow, and he's visiting other oil-producing nations, including Qatar, Iran, and Algeria. And they're trying to develop some kind of joint strategy. What can they do? Could they be trying to form a new cartel?
They could be trying to form a new cartel, but I think that would be very difficult. Let's also not forget the fact that Saudi Arabia and the Emirates, the other Arab producers, which are the bulk of the cartel, really are not happy with Iran. And Iran is in the cartel, but Iran is also getting hurt as badly as Nigeria, Venezuela, and Russia by these low prices. They are hugely dependent on their oil revenues. So it's kind of killing a couple of birds with one stone. And the Saudis are Sunni, and they're fighting the Shia problem in the region, and I wouldn't be surprised if that really wasn't a bigger target than Russia.
So not much you're saying that Russia and Venezuela can do here. Who is benefiting? Which countries are really winning from these lower oil prices?
Well, it sounds crazy, but you know, China and the United States are sort of the first and the fourth largest producers of oil, respectively, in the world, but they're also the first and second biggest consumers of oil and importers of oil. So strangely enough, while the oil companies in China and the US would like higher prices, the consumers in China and the US are probably the biggest single beneficiaries, along with the Europeans.
All right, well, see those prices at the pumps translated into lower prices at the pump. We're going to have to leave it there. Thank you so much, Diane Francis, award-winning columnist, journalist, and author of Merger of the Century: Why Canada and America Should Become One Country.